Hey everyone, PK here. In this video, I'm going to be talking about how not to constantly get gazumped and keep missing out on properties that you want to buy. Okay, so once again, my name is PK and I help people achieve passive income through property investing without using a buyer's agent and dropping 15,000, without wasting their weekends at inspections, and without wasting months or maybe years doing research on realestate.com or SQM or RP Data, any of these mainstream websites. But let's get into the video for today. So I know that so many of you, especially because the market is red hot right now, the market is red hot in areas that are actually worthwhile investing in. So there's about 15 suburbs that we're investing in across Australia, and it is so hot that so many people have been writing me and saying that we're missing out on properties. We've put in 2 offers, we put in 3 offers, we put in 5 offers, but still we're not able to successfully land the property that we want to buy. Okay, so I'm gonna go through 4 things that will hopefully help you. Okay, and if any you're watching this is especially for you. Hopefully it helps a lot. So the first one is price movement. Now, when you value property, you take the comparable sales, not for sale, but sales, sold properties in the last 3 months that are close to your property that you're interested in, very similar in terms of bedroom, bathroom, garage configuration, land, age, etc. And you figure out where your property stands or sits, and figure out what its value should be. Right? But the thing that people oftentimes misjudge in a moving market, in a market that's actually rising, is that the last 3 months of valuation are actually no longer relevant. You actually need to normalize them, or you need to adjust them upwards for any price growth that's happened. So for example, if you're taking a comparable sale from 3 months ago, it looks exactly like your property, it was sold for 500,000, but there has been, let's say 3% price growth or 5% price growth in the last 3 months, then you need to adjust that sold price up. Okay, you need to adjust it up. And keep in mind that the data on property is about 2 or 3 months lagging, right? So you'll only get a sense of whether there has been price growth in the last 2 to 3 months by in fact missing out on properties, because then you'll be able to tell that people are paying more for this exact property than they were 3 months ago. The data won't quite show that because it's lagging, right? The data will show it, of course, however, if the price has been going up for more than 6 or 12 months, and then you can say, okay, well, it's been going up for 6 months, therefore it's probably likely it has been going up for the last 3 months as well. Therefore, let's take that percentage growth and normalize that property that was sold 3 months ago. Let's normalize it up 5% or 3% or whatever the case may be, and use that as a true indication of what that property is worth right now, and therefore use that price to indicate what the property I'm interested in should be worth. Hopefully that's making sense. Alright, so that's the first thing, normalizing for price movements and making sure you're adjusting for lagging data. The second thing you want to be aware of and fully across when it comes to not getting gazumped by another bidder, not getting outbid, not keeping on missing out on properties, 4, 5, 6 properties. It's so frustrating because you've done all this work to get your pre-approval, to get your lending in order. You've done all this work to research the suburb, to figure out in that suburb what are the right streets, what are the right pockets, what is the right type of property, only then to not be able to buy those properties. Okay, so for the second thing that you need to know, it's that when you are outbid, so let's say you are outbid, you put in an offer of 300, and you valued it at 300, but then someone comes along and offers 320, and you're probably scratching your head and saying, well, that's way above the value. The reality is the value of the property is what someone is willing and able to purchase it for. So that's demand, the willingness and ability to purchase or buy something. So even though someone has bought 20k above 300, they paid 320, and the agent may tell you that, they'll say, look, you've missed out, someone gave 20,000 more than what you did. make sure that you include that recent sale in your comparables. Okay, so don't ignore it. If someone has now paid $320 for the property that you are interested in, guess what? That is the new value of those types of properties in that area. Okay, so for the next bid, for the next property that you go after, don't revert back to 300 as the valuation. You need to adjust up. Even if you think it's overvalued, or if you think it's ridiculous, someone has overpaid, that is the new demand, that is the new price for those types of properties. Okay, so that's just a reality, and I know it can seem a bit, you can be a bit miffed, why is someone paying so much money for this thing? It doesn't really matter, like property prices in New York for an apartment, they're more than what you think they should be, but they are what they are. Property prices in Sydney have doubled. Should they have? I don't know, who cares, but they have. That is the new price. Okay, so the price is what it is. When you miss out on a property, take that price, what it was eventually sold for, and this agent will tell you, into consideration when then revaluing or valuing the property that you're going to bid on next. So that's the second thing. The third thing, and I think those first two are probably the most important, okay? So if any of you are kind of frustrated that you're missing out on properties, I just want you to you might want to re-watch what I've just said, or hear it again, really connect with those 2 points, okay? The third one, something that I talk about all the time and clients achieve all the time, is off-market properties. Okay, so I know that in a hot market, when properties are selling like hotcakes, it's actually really difficult to get off-market properties, because why on earth would an agent actually, not list a property when they're going to get a premium for it if they do list it? But having said that, there are still opportunities to get it off-market. Okay, there's always situations, there's always circumstances, always scenarios why a vendor would prefer not to list it. Maybe they want a really, really quick sale. Maybe the agent is lazy. Maybe the agent is not from the area. Maybe the the vendor doesn't want to pay for the listing. Maybe the vendor has some sort of confidential or privacy concerns around taking people through the property. I mean, as unlikely as any of those sound, they're all possibilities, and there's multiple other reasons why vendors don't want to list property. Okay, so always establish relationships with some agents in the area or areas that you're looking to buy. It's always a good idea. Be persistent. Just because you called them up a couple of times doesn't mean that they're your best friend. Keep persisting. 5 or 10 minutes call every Monday for a month, 2 months, 2.5 months. And I guarantee, and I can say this because it happens every day of the week, I can guarantee that agent will have you at the top of their mind, and when a property does come up that you've specified is what you're after, and the vendor doesn't want to list it, or the agent is lazy or something like that, they'll give you a call. And it doesn't matter if you're a buyer's agent or not. It's the same method that works, and that works remotely, right? You can be in Brisbane and apply this to suburbs or agents in Adelaide. It works exactly the same. Although agents in Adelaide are particularly parochial, which means they're a little bit coy on selling to interstate investors. That's just a fact. So that's the third thing, off market. Persist. Buying without competition is always a good idea. And the fourth thing that I want to mention is, what was the fourth thing that I wanted to mention? I think it was that you should never be desperate. Okay, so never buy out of desperation. Don't think that you've missed out on 4 properties, you've missed out on 5 properties, you've missed out on 7 properties, that now, I'm throwing my hands up in the air, I'm just going to put an offer on, I know it's paying too much, but I just want to buy this thing. Don't get into that mindset. Never sacrifice your suburb, never sacrifice the quality and criteria of the property that I teach or that you have. You want high performing properties, high growth, high positive cash flow, low maintenance, value add potential, ideally. So always prioritize that. Don't compromise. I know it's hard right now because listings that are at a record low, but never compromise that. But if you keep the first 2 tips that I mentioned in mind, then you'll be able to outbid others even within a sort of a reasonable amount of the valuation. Okay, because you'll know what the valuation is, even though it's dynamic, even though the price is growing, you'll know what the valuation is, and you're happy to buy at the valuation. Okay, so don't be tempted to pay 30K more than the valuation. Do quickly put an offer on. Do, you know, limit your conditions, your special conditions. Do try to make it life easy for the vendor and the agent by, you know, if your bank or your broker allows, getting rid of the finance clause, or putting a big deposit like $50,000. It's refundable anyway if you've got the clauses, if you've got some clauses in there. In Adelaide, there's a 3-day cooling off period. You can get all of your money back for no reason whatsoever. So just get an offer in, get a contract in before the first inspection. You need to transact before the first inspection. That is the most important thing. So I think that was ended up being 5 or 6 things, but you know, be careful of price movements in the last 3 months, number 1. Number 2, if you are outbid, that new price is unfortunately the value, so keep that in mind in terms of comparables and valuing the next purchase. 3, off market, don't be desperate, but really persist with agents. Number 4 is, like I said, don't be desperate. Try to limit your special conditions, your clauses, and give a big deposit if you can. Some states like South Australia make it easy in terms of cooling off. So there's so much detail. I mean, this is just the top of the surface of the iceberg, really. But hopefully these things give you confidence that if you are missing out on properties because it is a hot market, because there's a lack of listings, you still have an ability, you have some ammunition in your arsenal to actually buy, and buy well. And I can tell you, people are doing it every week. I'm posting it on my socials every week. It's still possible. Persist. Okay, so if you are missing out on properties, let me know in the comments. Just say, yeah, I'm missing out, and tell me how many properties you've missed out on. What have you tried to do to avoid it? I'll try to help you out in the comments. If you share your experience, or if you have been successful even in the current market, especially in hot markets like Adelaide, let me know as well, and share your experiences, what you did well. I'd be super interested to hear, and I'm sure others would be as well. So if you've got value out of this video, please subscribe if it's on YouTube, or hit the like or love button, and that way more people will see it. Okay, and also leave a link below on how you can learn this in a more advanced way to build passive income, positive cash flow, and growth. Okay, my name's PK. Hopefully that was useful. Thanks guys, catch you later.